Welcome to the Deep Dive. We're here to unpack the key insights from complex sources. Today, we're looking at something absolutely vital for India's growth energy infrastructure. I mean, it's the literal power behind everything.
Exactly. And a huge player in that space, especially in transmission, distribution, and now smart metering, is Adani Energy Solutions Limited, or AESL.
Right. So our mission today is to really get into their latest quarterly results, the ones for the quarter ending June 30th, 2025. That's their Q1 FY26.
Yep. We want to pull out what really matters, understand the performance drivers, and figure out what it all means for the energy sector and for you listening.
And just so you know where we're getting this from, we're drawing on AESL's official media release, their investor presentation, and the filings they made to the stock exchanges like BSE, NSE, and Singapore, all dated July 24th, 2025.
So, pretty fresh information.
Okay, let's dive into the financials, the pulse check. Some numbers really stood out to me.
Oh, yeah. Like what?
Well, the profit after tax, for instance. A massive 71% jump compared to last year. RS 539 crore. That's
Yeah.
huge growth.
It really is. And it's not just the PAT. Their total EBITDA earnings before interest, taxes, depreciation, and amortization. A good measure of operational profit that crossed Rs 2,000 crore.
Over 2,000 crore.
Yeah, landed at Rs 2017 crore. That's up 14% year over year. And total income, up 28% to Rs 7,026 crore.
Wow.
Even cash profit saw a nice bump, up 15% to Rs 1,043 crore.
Yeah.
So yeah, when they say solid performance and robust growth in their release, the numbers seem to back that up.
Definitely seems solid. But that 28% growth in total income, if we look underneath, what's actually driving it? It's not all just standard operations, is it?
That's a great question. You're right. They mentioned stable operating performance, sure, but the big engines here seem to be, firstly, this thing called Service Concession Agreement Income, SCA income.
The CA income.
Yeah, it's linked to their capital spending on projects. And secondly, the growing contribution from the smart metering side of the business.
So less about just selling power day to day, because I saw their operational revenue was actually kind of flat.
Exactly. Operational revenue was around Rs 4,600 crore, pretty much the same as last year. Some new transmission assets are only just starting to kick in, and interestingly, their Mumbai distribution revenue was a bit soft.
Soft. Why was that?
Early monsoon, apparently. Less need for air conditioning, so lower power consumption than usual for that time of year.
Ah, okay. So back to that SCA income then. That must have really shot up to compensate for the flat operational revenue and still get that 28% total growth.
It absolutely did. The SCA income was Rs 1,924 crore this quarter. Compare that to just Rs 646 crore in the same quarter last year. Huge difference.
What exactly is that SCA income tied to?
It comes from their build, own, operate, transfer projects, these BOOT projects. Basically, AESL builds infrastructure, runs it for a set period, making money back and a profit, and then transfers it, usually to a government entity.
Okay, so it's like a long-term infrastructure lease generating predictable income.
Pretty much. It gives them those steady, annuity-like revenues,
Yeah.
crucial for funding these massive projects. And clearly, it had a huge impact this quarter.
Makes sense.
Yeah.
And you mentioned it's tied to capital expenditure. Sounds like they're spending a lot to build these things.
Oh, definitely. CapEx surged 1.7 times compared to last year. It hit Rs 2,224 crore in Q1 FY26. Last year, it was Rs 1,313 crore.
Wow. Almost double. Where's that money going mostly?
A lot is going into transmission, of course, but the really standout figure is the smart metering CapEx. That specifically surged 8x. 8 times.
8 times.
Yeah.
Hey, they are seriously betting big on smart meters.
No question. It's a clear signal about where they see a major part of their future growth.
With all this spending and changing income streams, how's their overall financial health looking? Like their debt situation?
Actually, it seems to be strengthening. Their key ratios improved quite a bit. The consolidated debt-to-equity ratio is down to 1.77.
Down from what?
From 3.15 a year ago. That's a significant improvement. Means they're relying less on debt compared to equity. And their total debt to total assets ratio also dropped from 0.65 down to 0.53. So the balance sheet looks healthier, more resilient. Their net debt, by the way, was about Rs 33,500 crore for the quarter.
Right. Now, one technical point. These results are unaudited, it says. What should we make of that?
Good point to bring up. It means they haven't gone through the full, detailed annual audit process yet. However, the documents state they have undergone a limited review by their statutory auditors, Walker, Chandiok & Co. LLP.
So some level of scrutiny.
Yes, it provides a degree of assurance. And importantly, they also included a note addressing something potentially sensitive, a U.S. DOJ and SEC indictment involving one of their non-executive directors.
Oh, what did they say?
They were very clear. The company is not named in these matters, and there's no impact to these consolidated financial results, including that directly shows transparency, which is important context for anyone looking at these numbers.
Okay, good to clarify. So financially, things look quite positive, growing profit, improving debt ratios, big investments. How is this translating on the ground? Operationally, let's talk transmission first.
Yeah, the transmission side is busy. They commissioned 3 new projects just in this quarter: Kavda Phase 2 Part A, Kavda Pooling Station 1, and the Semgad transmission line.
Adding more lines to the grid?
Yep, added 79 circuit kilometers, sec kilometer, to their operational network. That brings the total to almost 26,700 kilometers. It's a vast network already.
And are they still winning new projects?
They are. They secured the WRNES Telegon Line project in Maharashtra. That involves acquiring the project company and building out 3,000 MVA of new substation capacity. That's a significant amount of power handling capability.
So the pipeline looks strong.
Very strong. Their under construction order book is massive, around Rs 59,300 crore, and they expect several major projects like North Kanpura, Mumbai HVDC, and others to be fully commissioned within this financial year, FY26.
More capacity come online soon then.
Right. And the near-term tendering pipeline, projects they could bid on, is estimated around Rs 90,000 crore. Includes a couple of large high-voltage direct current HVDC projects, so plenty of potential work ahead.
And how's the existing network performing?
Very reliably. System availability stayed high at 99.8%. That's crucial for grid stability.
Okay, let's shift to that area they're pouring money into. Smart metering. What's the story there?
The pace is just incredible. In Q1 alone, they installed 24 lakh smart meters. That's 2.4 million meters in 3 months.
2.4 million in a quarter.
Yeah. Their cumulative total is now up to 55.4 lakh, or 5.54 million. They mention an industry-leading daily run rate of installing 25,000 to 27,000 meters per day.
Per day. That's
Yeah.
staggering.
It really is. It shows a massive operational capability, and they're not stopping. The goal is to install another 70 lakhs, 7 million this year.
Aiming for what total by year end?
They're targeting at least 1 crore, 10 million meters installed by the end of this financial year, FY26. And the pipeline of projects they've already won but haven't installed yet, 22.8 million meters.
Wow. This is clearly a huge strategic push. What does this mean for India's grid? Big picture.
It's fundamental grid modernization. Smart meters mean real-time data, better tracking of usage, quicker fault detection, better demand management. It helps integrate renewables more smoothly, too.
So it's about efficiency and future-proofing the grid.
Exactly. AESL is positioning itself right at the center of that digital transformation in the power sector. It's not just about poles and wires anymore. It's about data and intelligent management.
Makes total sense. Okay, quickly on the distribution side, Mumbai, AEML, you mentioned volumes were flat because of the monsoon.
Yeah, volumes were flat at around 2,939 million units. Early monsoon hit demand. But on the positive side, they achieved their lowest ever distribution loss there, just 4.24%.
So very efficient operationally, even if the weather dampened sales a bit.
Precisely. Reducing losses, both technical and theft, is a constant battle, and hitting a record low is a significant achievement.
Okay, moving beyond the pure operational and financial numbers, ESG, environmental, social governance, is increasingly important. How does AESL stack up there?
They seem to be taking it very seriously and getting recognized for it. Their Sustainalytics ESG risk score improved. It's now 25.1, which is medium risk.
And how does that compare?
It's significantly better than the global utility average, which Sustainalytics puts at 36.9. Remember, lower is better with these risk scores.
Okay. Any other recognitions?
Yes, they were reaffirmed as part of the FTSE4 Good Index. Their score there is 4.4 out of 5, way above the industry average of 2.9. That puts them among the top 6 global utilities for ESG, according to FTSE.
Top 6 globally. That's impressive.
It is. They got a perfect 5 out of 5 for governance, 4.3 for social, and 4 for environment. Also, their CDP supply chain score improved to A, which is the leadership band, up from B last year.
So strong external validation. What are they actually doing on the ground for ESG? Any specific commitments?
Quite a few. They're aiming for 60% renewable power procurement by FY27 and 70% by FY30. They've already cut their greenhouse gas emission intensity by nearly 70% in FY25.
Wow.
They also claim zero waste to landfill and being single-use plastic-free since FY23. plus being certified net water positive, meaning they return more water to the environment than they consume.
And on S&G, social and governance.
They mentioned social initiatives like skill development for women, educational support, and on safety, which falls under both S and G, they reported zero fatalities, low injury rates, and over 55,000 hours of safety training just in Q1, so it seems quite embedded.
It definitely sounds comprehensive. So what's the final word from management? What did the CEO, Kandar Patel, have to say?
He described it as another robust quarter, pointing to effective on-ground execution and consistent progress on their big capital projects. He basically reinforced their focus on getting these under-construction projects finished on time.
Did he give a sense of the outlook?
Yeah, he talked about immense opportunities out there. He mentioned regulatory support, strong power demand in India, and the changing energy mix towards renewables as key underlying factors driving their business.
Right.
And interestingly, he anticipates a significant increase in their CapEx rollout and bidding activity starting from Q2, basically now, as the monsoon season ends.
So they expect the pace to pick up even more.
Seems like it. Signals strong confidence in their ongoing growth.
Okay, so if we wrap this all up, what's the core story from AESL's Q1 results?
I think it's a story of strong execution meeting strategic investment, solid operational performance, especially in transmission reliability and distribution efficiency, financial health clearly improving with better debt ratios.
And that huge push into smart metering.
Absolutely. Plus, that significant SCA income driving top-line growth fueled by heavy CapEx, and all underpinned by a, well, apparently quite robust and validated commitment to ESG principles.
It really gives you a snapshot of how India's energy sector is transforming, doesn't it? The scale of investment in transmission, the rapid shift to smart grids, the increasing focus on sustainability.
Definitely. AESL's performance is kind of a window into that wider transition. It shows the direction things are moving.
It makes you think, though, with millions and millions of smart meters going in, how is that going to change things for us, the end consumers? Will having that real-time data actually make us use energy differently? That feels like a big shift waiting to happen.
That's a fascinating question, and maybe even bigger picture. Looking at Adani Group's massive investments across ports, airports, energy, data centers, how will this concentrated push shape India's overall infrastructure landscape in the long run? Definitely something to keep an eye on.